Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing the Speculative Sentiment Index. In this presentation, we will be looking at the Speculative Sentiment Index and its significance in the Forex market. If you have been researching some of the technical indicators that traders use, such as the stochastic oscillator, or perhaps even the Bollinger Bands or MACD, you will realize that the majority of them are lagging indicators. That is to say that the data they imprint on our computer screens is based on previous or historical data, which it uses to plot various graphs, moving averages, and plot lines onto our charts. Although this information, when carefully analyzed, helps us to determine a great degree of the potential future movements of price action, the very nature of such lagging indicators does not necessarily tell us what is happening at this very moment in time, whereas price action, which is itself one of the few leading indicators of price action, does. Although this does limit our trading ability to a certain extent, professional traders learn to marry the two together in order to tip the scales in their favor when it comes to pulling the trigger on trades. Of course, the absolute perfect solution would be if we all traded the same way at the same time. This would be a perfect solution, but of course it does not happen like this, because of the many different timeframes being traded and the many different types of traders. These range from scalpers to intraday and swing to long-term traders. But what if we could take a snapshot of what other traders are doing at any given time? If we knew what they were doing, and if we could see statistically whether they were more long or more short on a particular pair, this would give us an added advantage, would it not? This is exactly where the Speculative Sentiment Index comes into play. It should be considered as a leading indicator along with price action and incorporated with your other technical tools to help you decide when to trade. So let's take a look at how it works. Example A. The Speculative Sentiment Index, or SSI, is the accumulative trading positions data which is captured in real time by various brokers, as there is no central exchange. Example B. The broker will then filter the information and offer it into a graph format, which each pair tells traders whether there are more buyers and sellers or vice versa. This information is provided as a ratio between the two groups. Example C. If we know that there are more buyers or sellers on a particular currency pair that we are interested in trading, it can help to influence us either to take a trade or maybe even to wait on the sidelines. But one of the problems with the SSI is that the information will very likely differ from broker to broker and from timeframe to timeframe, in which case it may be advisable for you to check 2 or 3 SSIs to help give you a clearer overall picture of which way price action is leaning. Example D. Some SSIs provide more information than others. For example, you might expect to see positioning including the ratio of long to short. Example E. The open interest. Example F. The changes between long and short positions. The more information you can accumulate, the better your decision-making processes will be. Example G. Next we are going to look at how to use the SSI. Example H. The positioning statement is one of the most utilized aspects of the SSI report. Example I. Here we can see the number of traders who are long or short on a pair, and in this example we can see that this broker offers the change in open interest, which is currently 2.8% for the Euro-USD pair. So for every trader that is holding a long trade in this pair, there are 2.81% of traders who are holding short positions. Any position that shows a minus in the front of the number represents the number of short positions, while readings that are above 0 represent the number of traders who are not long in this pair. Although the SSI is a leading indicator, it is considered to be contrarian. That is to say, the information that is supplied by the broker should be used to trade against the retail traders with the current open positions. The rationale behind the contrarian aspect of this indicator, using 2.8% of the Euro-USD traders as an example who are short, means that eventually the sellers will need to close their positions. They will do this by buying the pair to exit. And because we know that there is only one buyer for every 2.8 sellers, this position will eventually turn as the sellers close out their trades and leave a buying void behind them. The opposite would apply if there were more buyers than sellers. To maximize the reversal potential of this indicator, it is advised to use it when there is a high ratio of change between the buyers and sellers. Please remember to check SSIs on a regular basis because some of them will be updated by the broker on a daily timeframe basis. Some other brokers will update them every hour or every 20 minutes. It is important if you decide to use this information to trade that it is as up to date as possible. Only then will it help you determine whether a particular currency pair is bullish or bearish. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.